Hey guys, welcome back. In today's video, I'm going to go over a script that I created to kind of backtest and see at what drawdown level would be a good idea to buy a stock. This backtest will be more for longer term investments. So in this backtest, you can pick any stock or ETF, and I have created a function where we input a minimum drawdown level and it will subset all cases in the dataset that meet this level. And you're also going to be able to specify what dollar amounts you want to buy. And the final output would be a trade table displaying the equity curve had you employed this strategy. So we're going to start off by requiring some packages here. You're going to pick a stock or ETF of your choosing. Now the caveat is that in this instance, SPY has only gone up. The strategy will perform badly for a stock that's continuously declining. But we're going to go ahead and get some data from Yahoo Finance. We're going to calculate the daily returns. Next, we're going to generate a drawdown table. So if we take a look at that table, here we see the top 100 drawdowns for our stock. And what we're going to do is combine our stock data, the return, and this trough or depth level, just so that we can verify that we're making proper calculations. So back in the script here, we're going to merge our close, our stock return, and then we're going to create an XDS object using the depth, and we're going to order by the trough date. We're going to format the column names, and then we're going to add our drawdowns or the continuous drawdowns for our data set. So if we take a look at right here, we have our stock close, we have our daily return, we have the max drawdown, and we're going to verify that the last two columns are identical. So that was 3.5%. Here we have a max drawdown of 5.12. So now that we have this XDS object, we're going to focus on this last column, and we're going to go ahead and build a function that's called ddstrat. So we're going to pass in a drawdown level, which will subset all the cases in our data set that have met that requirement. We're also going to make sure that we don't continuously buy the stock by adding this parameter called buy after n days. So for example, if SPY has a drawdown meeting our requirement, but then the next day it falls again, it's going to also meet our requirement. So here you would need to specify the number of days in between drawdowns that you would like to use to buy in. And lastly, we have our dollar buys. So this is the dollar amount you want to use, assuming we have fractional shares. So it's going to start off by subsetting all the cases that have met the drawdown level. We're going to add the days in between drawdowns. And at first I wanted to skip over any drawdowns that were 1 day in between. But in line 55, we're going to make sure we keep our first instance, which has a difference of 0. And additionally, we're going to keep drawdowns that meet our requirement in days according to the level that you pass in. Next, we're going to add a column with the latest price. Here we're just going to add the dollar buys or the dollar amount divided by the stock close. We're also going to add the point difference, which is just the last price minus our opening price. And we're going to calculate our P&L by multiplying the shares and the points. And finally, just return that XDS object. And in the last block, we're going to use that function that we just built. We're going to pass in a drawdown level, and we want to make sure that our drawdowns are at least 5 days in between. And I want to buy $100 of the stock at each instance. And we're going to take a look at our trade table here to see what it generated. So we have our stock close, our daily return, the max drawdown or the depth given this time period, the current drawdown level. So as you see, all of these cases are below our minimum threshold level of 2.5%, along with the number of days in between, which are greater than or equal to 5 days. We have our last price, and assuming that we have bought $100 worth of this stock, this would be our number of shares, the number of points generated, and our P&L. So we only have about 138 cases, which is not that bad given our equity curve here. So of course, this is not investment advice. I just wanted to backtest and see what type of returns we can get, specifying a drawdown level for buying the dips. So again, this is assuming that you think that the stock will continue to rise, which is not the case for all stocks. But with that, guys, this concludes the video. I hope this was useful information. I'll leave a link down in the description area to my Patreon where you can find the script. Please consider subscribing to the channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.